All right, everybody. Hey, Russell. Good to have you. It's got to be really, really late in Logan, in Scotland. I'm glad you could come. I want to welcome everybody out to the webinar tonight. Thanks for coming. My name is Jeff Gibby. I'm going to be reading a legal disclaimer and talking a little bit about our presenter today, and I'll turn the time over to him. So, really appreciate you making it. We've got a fairly good crowd today, and this is a really neat system that it's been packaged up. Hi, Miguel, and included with MetaStocks. So let's go ahead and get underway. Today's demonstration is designed to instruct you on using Metastock and the accompanying add-ons. It is not a recommendation to buy or sell. It is a guideline to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Logan is going to be the presenter today. Logan is going to give a great talk today. Logan, just to kind of give you some background on Logan, Logan used to sit kitty corner from my desk, and I was trying to think of something kind of incriminating to say about him to introduce him, but I really couldn't think of anything. Logan, to kind of give you some background on Logan, Logan's a full-time trader now. That's all he does. He's one of the better coders that I know from Metastock. I always remember when I was working on trying to code something for somebody in Metastock, and I kind of got stuck. I'd be like, how would you do this, Logan? And he'd say, I do it this way. And he's very, very gifted when it comes to that. I'll also credit with Logan with getting me into option trading. And so Logan's awesome. He's going to come in here. He's going to talk about LCI, what it is, all that kind of good stuff. So let's bring it on, Logan.
Thanks, Jeff. Can you guys hear me?
You're coming through for me. Is there anything else you want to talk about in terms of introducing yourself out?
No, I think that's great, Jeff. Like Jeff said, I am now a full-time professional trader. That is what I do for a living. Jeff not being able to think about anything to incriminate me. He's just being a nice guy and humble, because I'm sure that for the amount of years he had to put up with me, that there's a few things that he could probably think of to probably make me look bad. So I thank Jeff for holding back on that one. So, but let's go ahead and we'll get started here. I'm just gonna pull up my screen. All right, can everybody see my screen? Doing okay? Okay. Okay. Perfect. So we'll just go through now. I don't know if where I left off or where everything kind of stopped, but essentially there's 3 different data points to the market that we can trade and that we can use to analyze our trades. What are those 3 data aspects that we're looking at when analyzing technicals? Price, volume, and time. Exactly. You must have listened to me before. So price, volume, and time. That's correct. So when we break everything down into its, most basic form, we have the aspect of price. How much is it trading at? Okay. We have the aspect of volume, which is how much. Now, I always get the question, well, what about tick bars or range bars? They are still a formation of price in relation to volume. Whenever you establish a tick bar, you have to incorporate a size, okay, which is a volume-based calculation. So, and then of course the aspect of time. Now, price is by far the most utilized data aspect point that we have. Volume, unfortunately, doesn't get used as much as it should. Volume is one of the most important key factors that you can use in your trading. The problem is that it's very misunderstood. And then time, of course, I don't have a crystal ball indicator. I do my best, but no one has that indicator. So time becomes more or less a guessing game, or in the aspects of looking back historically, we understand what price and volume have done over a specific structure of time. So let's go ahead and we'll just dig into the LCI trading system right off the go. Now, the LCI trading system looks at support and resistance levels. Okay, and that's what it's really geared towards. In my trading experience, I found that support and resistance levels were really the key aspects to the market in terms of identifying appropriate entry points. Okay, now the problem with support and resistance, and I'm sure all of you have seen this, is that it's very discretionary in the way that it works. Okay, someone's idea of support versus someone else's idea of support could be two completely different things. So it can be difficult to understand what we're looking at when it comes to those terms of support and resistance. Now, the LC indicators automatically identify those support and resistance levels, and today I'm going to go into more on how I view the market and what type of techniques I use to calculate those, so you guys have a better understanding and really know what we're trying to accomplish with the system. It also automatically identifies Fibonacci retracement levels. Okay, Fibonacci retracement levels within themselves are support and resistance factors. Now, some argue that they are, they've been so widely used and people talk about them so much, they're kind of a self-fulfilling prophecy, and that may be, but something that's not a self-fulfilling prophecy is when we look back historically and we know prices have been affected at that level before, which gives us that historical benchmark or background to help us trade moving forward, and we can utilize those Fibonacci retracements as confirmation. And then again, going into volume, okay, so the LC indicators really expand on volume. So rather than just having a bunch of bars at the bottom of the chart, it transforms that into a visual structure to help you understand more about what is volume doing and how is it acting in relation to price. A couple different ways we can look at that is by exhaustion and expansion, and then volatility, and we'll break into that a little bit later. And then we look at overbought and oversold conditions, which is where we bring in that factor of time. When we incorporate time, again, we don't know based off of a timing structure when something is going to happen. We can have our best analytical guess. Okay, we can look back historically. We can try to read footprints in the market of what's happening already, but we don't know ultimately at the end of the day what's going to happen, right? So utilizing overbought and oversold conditions tries to give us an aspect or a concept of time to try to give us that edge. And then, of course, trailing stops and profit targets and money management. If there's one thing I hope you take from the webinar today, is how important money management is when applying it to your trading. Now, just to briefly go over the support and resistance. So again, the LCI is going to automatically identify support and resistance levels, okay, within your chart. The way that this calculates, it doesn't matter the time frame of your chart. It doesn't matter if it's a new tick bar chart in Metastock 14. The calculations are automatically going to structure it in a way that the lines are plotted. Okay, so one thing that I found in my trading that was really a pain was you had these indicators that would automatically plot for you your support and resistance, but I had to go in and manually input different values. And I'm sitting here thinking as a new trader, well, I don't want to have to manually input these values. I want it to tell me, what is the support and what is the resistance. I want something to be able to tell me what values I should use as a trader. Now, that's what the LCI support and resistance does. So let's break into the types of support and resistance. And don't worry, I'm not here to bore you with a PowerPoint. We'll get into Metastock in a moment, but the experience in Metastock will be much better if you understand the indicators as we go into it. So bear with me. But you have two different types of support and resistance indicators. Okay, you have the minor support and resistance, and you have the major support and resistance, okay? So what we're looking at right now is we are looking at the minor resistance and minor support. So if you're utilizing the LCI template that comes in your Metastock 14 as a standard, it's going to be represented by the dotted red and dotted green lines. Of course, green meaning support, red meaning resistance. Now, what are minor resistance levels? Okay, they mean two things. One, they are potential major levels on an intraday basis. So the charting example we're looking at right now is of a daily chart. So these levels are indicating where, if I were to break it down into an hourly chart, where my major support levels would be, or my major resistance levels would be. So it's giving me an inside picture on what smaller time frames are doing. Okay. The second part of that is that these levels form eventually into major levels, okay, or what I would call a developing level. There's a lot of support and resistance structure that tries to predict where these levels are based off of, the zigzag indicator, which utilizes point change or percent change. I've seen other support and resistance indicators that are based off of, completely other different indicators. And all that does is it just waters down and muddies up what price is telling us to begin with. Okay. So by analyzing price, it gives ourselves a clear picture, we're not muddying the water, of where the actual support and resistance is going to be. Now I'll move over. Now this is the same chart, so taking the same picture, so we're looking at our minor, heading over to our major resistance. Now, major support levels and major resistance levels is where we base our structure and our strategy around entering the market, okay? These are the levels where we've had drastic price changes within price levels. And as we look at this example, we can see that multiple times we've had price hold to these levels. And actually, if we go back and look historically, you'll see that there were other levels that developed prior that even gave us signals on some of the developing structures as well, and we'll see that in Metastock when we get into it. But in the LCI template, it's going to be highlighted by your solid red and solid green values, again, that are automatically displayed. Now, are there any questions on the support and the resistance structure so far? Go ahead and put in the chat any questions on support and resistance so far. I'm sorry, I do move quickly, so. Do I show both? Can you clarify that question for me? Like, do I have both the major and the minor displayed within the chart? Is that what you're referring to? How is the S&R calculated? It's a great question, Stuart. We'll get into that here in just a moment. Okay, and Steve, where does supply and demand fit in? That's a great question. So support and resistance is within itself supply and demand, okay? And when we identify supply and demand, that's what we read within our volume indicator, and we'll get into that in a moment to see how prices are acting. But supply and demand is simply where prices reverse. It's where buyers overcome sellers, and vice versa, where sellers, overcome buyers. And as I get into the volume and we read that volume at these levels, hopefully it gives you a better picture on what the traders themselves are actually doing. And then going back to the other question, yes, the major and minor levels are both going to be plotted in the template. Yes. Now, is it required? Do you have to? No, but it's definitely, you know, to your benefit to have both those levels so you can see where those developing structures are. But good questions. Any other questions? Do a couple more and then we'll move on, and of course I'll be able to answer a lot of questions here at the end as well. So great question. That's a great question, Jason. The system itself, okay, why, Jason's question is why only 4 lines of support and resistance, okay? The system itself, when you get buy and sell signals, is going to take into consideration multiple support and resistance cycles, okay? Now, as far as a display structure, I went through multiple testing structures to see how many levels were affecting price at a given time, okay? So if I were to ask, if I were to ask you why, let me break this down again. If we're looking at chart patterns, okay, so not candlestick patterns, but we're looking at chart patterns themselves, okay, what are, 2 of the most, or 2 or 3 of the most significant chart patterns that you see in a chart that people talk about, that traders talk about? What are the 3 chart patterns that are most looked at? Anyone have an idea? Double top and a double bottom. That exactly. Okay, what else? Triple top and a triple bottom, right? I'm sure someone's typing that in now. Okay. Divergence. Okay. Well, let's look at the chart pattern. So the chart patterns, yes, double tops and double bottoms. Okay. Also triple tops, triple bottoms, and head and shoulders, right? Those are some of the key major chart patterns that are looked at. Well, how many levels does it take to utilize a double top? We at least have to have 2 levels, right? And usually, I'm not saying always, but usually there is a 3rd level that's causing those 2 to form at that particular location. Same with the triple top and a head and shoulders. Typically we have those levels. So to answer was it, I believe, Jason's question, in all of my experience, based off of the cycle movements within a market, there are usually, now I'm not going to say always because there's never always within the market, but there are usually 4 levels, support and resistance levels on each direction, acting on price at any given time. Okay. Now I'm not going to say that extreme levels like 52-week high and low structures, or the highest a stock has ever been or the lowest a stock has ever been, isn't going to have significant relevance, even if it was, way back historically, because it's certainly going to, okay? But in the cycle revolving movements within a stock, okay, the majority of them have 4 levels acting on them at one given time, okay? So that's why we don't have more. I found when I did a lot of my testing, if I went more than 4, the levels doubled up on each other, okay? So I would have 2 or 3 levels like at one particular area at the same point. Okay, same with support. And if I used too few, I wasn't getting the full clear picture. So I did a lot of testing, went through and found that that threshold was 4. So hopefully that answers your question. display what you mean. Can you clarify on that, Stuart? Four levels. So I'm talking about the amount of support levels that are drawn. So if we look at this example, we can see that we have 4 resistance levels that are drawn, and we have 4 support levels that are drawn that are currently affecting price or have a higher probability of affecting price at that time. Okay. So let's move. These are great questions. So keep asking questions. I'm gonna continue to move forward, and then I'll stick around after the presentation to help answer any questions you guys have as well. Okay. So feel free to keep typing in your questions, and we'll address them as we move forward. Okay, that's a great question, Francis. We'll get into that when we get into the expert advisor. Okay. John, is it a more sophisticated version of pivot points? Yes, it is. Okay. And the reason I used a pivot structure is because that is what price is. Support and resistance is not a level that some volatility indicator plots. Okay. It's not a calculation that's based off of a set percentage value. Okay. So so yes, it is. It's based off of price. It's based off of a pivot structure. It is a complicated pivot structure. Took me a while to get there, but yes, it's based off of the actual price movements. Does it work in tick charts? Yes, it will, provided that you have enough data plotted to go back, but yes, it will work in tick charts, absolutely. Okay, so let's move forward here. I know you guys are asking multiple questions, and we'll get to them. Don't worry, but yeah, I can give you guys more explanation. Yep, weekly charts, absolutely, Jason. Yes, and I will look at weekly charts to help confirm major reversal points. Absolutely. Okay, if I'm analyzing the daily chart. Okay, so the LCI Fibonacci retracement. Okay, the Fibonacci levels again are going to be displayed automatically within your charts. Okay, so we can see that we've got these lines plotted. Well, what do they mean? Now the hardest question and thought that I always had as a trader was, okay, I'm trying to draw these magic numbers. Okay, but for one, where do I draw the points from? Okay, again, going into that discretionary problem with support and resistance. Okay, where do I start the lines? Where do I draw from? And then what numbers do I use? Okay, what am I looking at? Okay, I had those, I could never draw the same Fibonacci twice, and this is when I was starting out, and it got better, but then I had to constantly draw these, but it left me with one problem. Yes, I was able to see Fibonacci levels on a chart that I was looking at. What happened if I wanted to scan for these levels? What happens if I want to create an expert advisor? Like Jeff said, I do a lot of programming in Metastock and was trying to crunch and say, what if I want to automate this process? Because automating a process with a powerful software like Metastock, right? Metastock is there to save us time. So I was saying, how can I take the discretionary structure and save myself time with it? Okay. Now the Fibonacci levels that I utilize are the standard levels and breakouts that are used. Okay. To be perfectly honest, you can go in there and you can put in a 18.6, you could put in a 15.5, you could put in a 96.895, you could put in any level that you want, okay, in a Fibonacci, okay? But at that point, you're not holding to those Fibonacci rules. If you're familiar with Fibonacci, it was a very structured sequence of these patterns of these numbers always occurring. So when you see these levels and these values, there's a reason that those are the standards when you plot them. Now there was one additional level that I added for one specific purpose, and I'll get into that purpose in a moment, and that's the 76.4 Fibonacci level. Okay. Now, what we're looking at with our Fibonacci's is we've got our top level, which is a 0, okay, or our 100 level. It depends on the type of trend that we're in, okay. We've got the next level is going to be our 23.6 or our 76.4, okay. Our next level is 38.2 and then 61.8, again, depending on where our trend direction is, okay. We're in a downward direction, so I've labeled these in a downward structure. The expert commentary will highlight this for you automatically, okay. You've got the 61.8 and then again the 38.2, 76.4, 23.6, and then the 100 at the bottom, and then of course our 50 level in the middle. Now, as far as a pattern is concerned, what do you guys see here with the Fibonacci's? If I were to fold it in half at the 50 level, would these values all line up and be the same? Yeah, they would. Okay, so a 23.6, okay, is going to be the same as a 76.4 when this Fibonacci is folded in half. So you're looking at two parts. You've got an upward and a lower, okay, or an upper and lower above that 50 level. Now the Fibonacci levels, you can go in and you can change and you can alter individual line colors as much as you want. The structure that I have with the templates is this structure that we're looking at here. And the reason I put it this way is that the thicker the line is, the more relevance to price it is going to have. Okay? So our levels that are going to affect price more are going to be our 0 and 100 and our 50%. Okay? And then the next two levels that have the next amount of price affecting factor, is our thicker solid, or excuse me, our thicker dotted lines, and then the level that is, I wouldn't say is considered our weaker level, but has a smaller likelihood of affecting price is our 23 and our 76.4. Okay. Now you can do this in any software. You can go and if you draw a Fibonacci retracement from the bottom to the top of one area, and then draw it from the top to the bottom of the other, all these values will line up. It'll look like what I've programmed in, and it'll have it structured. So the level that I added, a lot of times you don't see it, is the 76.4, okay? But I found that I needed to add that in because it was a relevant mirror to the 23.6 level, okay? So that was the level that I added in because it was mirroring the 23.6. Okay, does that make sense? You guys have any questions on the Fibonacci's? And again, we can come back to it at the end. Francis, can the line attributes be set individually? Currently, no. Okay, currently those are hard-coded values that are within the DLL structure. Okay. So they are structured. It is. I've gotten requests for this before, though, to have something that would be adjustable, and it is something that I'm looking at to potentially have. Okay. But I can promise you that you're not going to go wrong. I did years and years and years of study on these lines. Okay. Don't worry about right now going in and changing it. Take the values that I've given to you and really utilize what is there. Okay. Many use 78.6 versus 76.4. Again, when it comes to Fibonacci's, you can utilize any level you want. Okay, you can break it down as I did my analysis historically, and then traded it for several years, looking at how prices were affected. Okay, the 76.4 mirrors the 23.6. Okay, so if I draw a Fibonacci up and then a Fibonacci down, okay, they're going to be the same. And it's amazing to see, okay, these Fibonacci levels, where a 61.8 level will all of a sudden become the 50%. The 50% level will then become the 23.6. Okay, they follow each other very closely. It is a little scary. I'll use the term scary because, again, these are our magic numbers and our magic values, right? But it's amazing to see how the movements of the market, overlay these. Okay, and there are ways in the LCI, and I'll have instructions for you here, hopefully relatively soon, that shows you how you can take it from this quick view structure that I've got programmed in and actually view it historically as well. Okay, so be on the lookout for that. Okay, good questions. Now, with the Fibonacci, we do have both intraday values, so we've got a minor and a major structure. Okay, volume. Okay, here's where we get into our volume. So the LCI volume indicator is going to consist of essentially 7 aspects to volume. Okay, now I know that sounds like a lot, but bear with me. It's actually a relatively easy structure to follow. Okay, now with the volume, I'm sure that you can assume that the green means that prices are going up. Okay, and red indicates that our trend is going down. Okay, so the red and the green factor, okay, is just a simple way to identify a shorter term trend. Okay, now it is a trend based structure, so it is going to be slightly delayed. I'm not going to say that it isn't, but I can tell you it's not based off of moving averages. It's more developed in that pivot structure. Okay, so it's going to give us our trend where we're primarily sitting. Now, the brightness of the color is going to indicate where our volatility lies. Okay, so with my bright green structure, okay, that's indicating that I'm in a primary bullish trend right now, and that my volatility is very high. Okay, my volatility is very high. On the opposite side, I have my bright red, which indicates that I'm primarily in a bullish trend for now, but volatility structure is also very high. Okay, and then on the flip side, our dark green indicates that we've got a low volatility. Okay, and then our dark red structure also indicates our low volatility as well, just in a primary bearish trend. Does that make sense? So I've labeled it out for you guys can see it listed here. Both green and red is bearish. No. So and I'm sorry if I if I said bearish for both of those structures. Okay, and I've got a typo. I can see what that is. So I apologize for the typo in the screenshot, but no, it is a bullish trend. Okay, and bullish trend, low volatility. Sorry for that, Francis, but thank you for the catch. So yeah, so the green indicates bullish trend. Okay, and high volatility. Dark green is we're still in a bullish trend, but we have low volatility, which typically indicates low or small price movements. So if we look at this example, okay, of this chart, we can see that at the top of our range, okay, when we had that last point, if you look down, you're going to see that volume was very low, okay? And we'll get into that in a moment within Metastock when we look at all the indicators together and see what we're analyzing, okay? Now, our lines that we've got in here, we're looking at expansion, okay? We're looking at our average, and we're looking at our exhaustion, okay? So the white line is just an average, 20 period average of volume, okay? It's a 20 period average of volume, okay? The yellows, okay, are a little bit of a dynamic structure, okay, that looks at the volatility of the volume, okay, of the volume perspectives. And it says, okay, when we have the volume up above this level, it indicates that we have there's an economic event that's occurred, okay, and you've got a lot of movement. Or 2, it acts as a professional buying and selling footprint, okay? Because you'll get spikes, you'll get a lot of volume that comes in, okay, and it looks like it's high, but we want to see it up above that level. So question the JDL says, so we lose the dimension of volume if we are using tick charts. That's correct, okay? Because you're taking out the perspective of time. So I'm looking at volume by itself in a relation to time, okay, and time and price. And if you use a tick chart, okay, now you're combining a set value of ticks in relation to price. Does that make sense? So it wouldn't give you the same skewing, but the support and resistance levels, the Fibonacci structures, they look at price movements alone. So they're going to give you that appropriate structure. Does that make sense? So yes, you do lose a dimension of volume with tick charts. And also a thing too when it comes to tick charts is tick charts again are that discretionary structure. I can set up as many ticks as I want in one bar or as little ticks as I want in one bar. Okay? And a tick, of course, is that structure of price change. Okay? Now, price can change as long as you have 100 shares. Okay? So I want to give you guys this perspective when it comes to tick charts. Now, I'm not trying to persuade you away from tick charts. Absolutely, that's not my intentions. But the reason why I don't structure tick charts and I look at volume in relation to time. Okay? A tick chart, you're setting in an amount of ticks. Now, a tick can be anything that's a even lot trade, which is 100 shares or greater, is a tick or counts as a tick towards the movement of price. Okay? So you can have 10, 15, 20, 30 trades at 100 shares come in that's going to affect that change in price momentarily, which is going to give you one count for your tick. Whereas then I can have one trade of say, 4,000 shares, okay, which is counting as one trade coming in, yet on a volume perspective is much higher. Does that make sense? Hopefully I'm making sense. If you guys have questions, of course, feel free to ask. But do you guys have any questions, any more questions on volume, on the volume structure? Okay, we'll continue to move forward, and then so we can get into Metastock. I don't want to keep you guys too late. Okay, now the next indicator that I utilize, it's an adjusted percent R. Okay, it's a Williams percent R, and it looks at a 10-period value. Okay, it's nothing, there's nothing proprietary, there's nothing secret about it. Okay, it is a 10-period Williams percent R. Okay, now the question I get all the time is why do I use the percent R? Okay, instead of stochastics, instead of RSI. Okay, instead of the CCI, instead of this indicator, that indicator, they all do the same thing. Okay, they all look at, okay, the relationship between price and historical highs and lows. Okay, what other indicator that we know do we know that does that? Our Fibonacci's, right? Fibonacci's, we're looking at where price is in relation to a previous high or low point. So if you go into your Williams percent R and you set a 14-period value, okay, you're saying find me the highest point over the last 10 days, find me the lowest point over the last 10 days, and then tell me where price is in relation to those 2 points, okay? Fibonacci's work the same way, okay? You're putting in a low point, you're putting in a high point, and you're wanting to see where price is in relation to those points were. Does that make sense? So the reason I use the Williams percent R instead of stochastics, instead of RSI, instead of all the other overbought, oversold indicators is because it works beautifully in conjunction with support and resistance and Fibonacci. Okay, your stochastics, your RSI, they are what I would say filtered. Okay, they use smoothing factors to smooth out the price points. If you look at a 10-period stochastic versus a 10-period 10-period Williams percent R, Williams percent R is going to look very jagged, okay? But it's giving me a true relationship of where the close is in relation to a previous high or low over the time frame that we structure, okay? So the Williams percent R is, like I said before, we've got price, volume, and time, okay? And it's the most simple aspect as far as an oscillator that hasn't had a moving average added and this percent smoothing added to move out these lines. Well, that's not the intention. I want to look at the raw data. I want to see the raw price movement and see where it is in relation to my other indicators. It's not meant to be, I know when I first started trading, I looked at these overbought and oversold indicators and said, man, if I created buy and sell signals based off of these, it would be perfect. Until it wasn't perfect, okay? They can be perfect for a time. But then when I utilized them and thought, well, you know what? If I use these as a confirming factor, if I've got a support level, I've also got a major Fibonacci level, and then my short term, so over the last 2 weeks, if I'm looking at a daily chart, okay, last hour, if I'm looking at a 5-minute chart, okay, if I know that that Williams percent R is hitting with those, then I know that, okay, now my support levels are lining up, my Fibonacci's are lining up, and my short-term retracement, okay, is also there. It gives me an added confirmation as to the value or validity that that particular price level has, okay? So if we're looking at the structure, now the Williams percent R as a standard looks at 0 to minus 100, okay? And I thought, well, that's kind of goofy, and it's a little bit hard to read, okay? In my opinion, I felt that it was a little bit hard to read, okay? So I programmed my own Williams percent R to be based off of a 0 line, okay? Now, just like we had in Fibonacci's, our 0 line, okay, is our midline, okay? It's our 50-50 line. If I'm going to be looking at something that is pulling up and then pushing back, I'm typically going to see that bounce around the midline, okay? Our top zones, okay, indicate our oversold, or excuse me, our top zones indicate our overbought structure. So if I'm in between the gray and the dotted red, I'm in overbought, okay? Based in relation to the time structure that I have. If I'm up above my dotted red line in my max overbought zone, then I'm extended. Okay, I'm way over, which means I'm typically making new highs. Okay, so either one, price is going to continue down, or price is going to continue to break into new highs. Okay, and it's going to continue to hover in that area until it falls back down within a range. And it's the same on the downside. So the downside meaning oversold. As we head down, we're in our oversold zone and then head into our max oversold zone. Okay. Is it a 30 bar? No, it's a 10 bar. 10 bar. Okay. Now the reason I use 10 bars, I do trade options a lot. Okay. And options, you want to have a very fast entry and exit because you're trading it in a relationship to time. Okay. You're trading it in a relationship to time. So if I'm looking at a daily chart, it's a structure of 2 weeks. Okay. If you break it down into other time frames, I mean, you can split time any other way. But essentially, it gives me what's happening in the short term. Okay. Because my Fibonacci levels and my support and resistance levels are telling me what's happening in the long term. I want to see what's happening in the short term. Good question, though. Any other questions on the percent R? Clear as mud on why I use it. Now another aspect in why I use that, and I'll get into this in a moment when we get into the Metastock charts, but the Williams percent R looks at the closing price in relation to high or low, okay? Where the stochastic oscillator also incorporates low and high in there in relation, okay? Closing price is the most important structure of price that you can look at, okay? And I'll show you what I mean when we get into the Metastock charts, okay? On an intraday, I also apply 10 bars, yes. I also apply 10 bars. Intraday though, okay? Quick intraday 101. When you're trading intraday, you have to be cognizant of and aware that there are only certain hours in the trading day that you really want to be trading where the market is going to give you enough volatility, okay? Because if you're looking to be a day trader, and you're looking to trade on an intraday level, and I do trade, day trade, okay? I do all sorts of trading in all sorts of different markets, okay? There was a study that was done, and I believe Reuters even did the study, where 80% or 85% of all the daily volume happened in the first 2 hours and last hour of the market, okay? Well, the market is open for 6.5 hours, okay? But the 80% of those trades, or maybe 85% of those trades, happened in a 3-hour span, in the morning and then in the afternoon, okay? So if you're setting up and you're looking to trade these fast trades, you want a lot of price movement behind you. You want to structure yourself to be trading at a time where those price movements are going to give it to you. Now, I'm not going to go and say that at lunchtime when when all of you guys in New York are sitting down and eating some lunch that the market's not moving, because it certainly can be, okay? But when you're trading, you always want to be playing that odds game, putting that odds in your favor. Well, most of the time I know that the market kind of flattens out kind of midday, right? You might have a couple days here and there where, it takes off and it runs, but you know what? For the most part, it's going to flatten out. Volatility shrinks, okay? As a day trader, you're not going to be able to structure, okay, your trades with large quantities of share with the appropriate structure to actually be able to close out your trades. So if you're going in and you're looking to buy maybe 5,000-10,000 shares of something, okay, and you want to sell it, you got to have somebody on the other side that's willing to take it at that price. But if volatility is low, your spread, okay, starts to widen, then that's money that you're leaving on the table because you weren't trading at an appropriate time frame, okay? So when it comes to intraday, okay, there's more than just, looking at a 10 bar this, 10 bar that, and analyzing signals from a previous day. Are they important? Yes. But you also have to understand when those signals are occurring, okay? Do you avoid overbought for buys or reverse for sells? Okay, that's a great question. It depends on the structure that you're looking at. Okay, if you're looking for a breakout signal, okay, a signal where you're breaking out into new highs or you're breaking out into new lows, okay, you are going to be trading in an overbought or oversold structure. You just are. Okay. So on a reversal signal, if I'm looking at a reversal type signal, I'm going to be looking for my oversold zone. If I'm looking to buy, I'm going to be looking for price to be in an oversold zone, okay, and coming up out of an oversold zone. But if I'm looking for a breakout structure, I'm going to be looking for price to be breaking into an overbought zone, because that's when prices are making new highs. Does that make sense? It's a good question. Let's hurry and move on. I know we're running low on time, but the LCI stop loss. Okay, so like I said, the most important structure of trading is money management. Okay, understanding not just when to get in and out of a trade. Okay, but understanding what's going to happen to your portfolio when you do. Okay, the most important thing, if you can take one thing, like I said before, is the most important thing in trading is making sure that you're giving yourself an opportunity to make more money than what you're risking. Okay? There was another study that was done that found that retail traders, a lot of the times, could be upwards of 70 to 80% accurate on their entries for their trades. Okay? And that sounds like a crazy number. Okay? And it doesn't line up with the fact that 85% of traders aren't successful in the market. Okay, another 5 or 10% barely break even, and then only 5% really kind of succeed. The problem is not the entry structure. Okay, what happens is they structure themselves where they're getting in and they're taking profits, and then a factor of emotion comes into play, whether it's greed, whether it's pride, fear, whatever that may be, comes into play, and they have 1 or 2 losses that kill all of their profits, okay, and put them into negative territory. You guys can be honest. Who's been trading, okay, and you've had a series of runners and life is just feeling good. Like you feel like you're on top of the world. Trading's easy. You think to yourself, there's no reason why everybody couldn't do this. You're making money, and then you have one loss that takes everything away from you that you'd worked for, right? And for all of you guys that are in here, for everyone who's not putting in anything in the chat window is lying. They're lying by not saying, okay, because it happens to everyone. It happened to me, okay? And unfortunately, sometimes it still happens to me because I'm not perfect, okay? But the idea is you want to strive to where if you can always make more than what you're risking, okay, and you set that in stone, okay, I can say, all right, if I give myself an appropriate opportunity to make at least twice the amount, okay, on one trade than what I'm risking, okay, so if I risk $10 to make $20, okay, I do that 10 times, I only have to be right 50% of the time, and I've made all the money that I potentially risked, okay? So it's not necessarily a structure of getting in and out. Is getting in and out important as far as, what signals work the best? Yeah, absolutely, okay? But an even more important structure is that money management and putting that in your favor, okay? Now, all of this comes into the LCI S&R Scoring Indicator, okay? So this is where all my years of experience, whether it was good or bad, okay, analyzing the markets came into play. Okay? The scoring indicator takes into consideration all the factors that we just talked about and more. Okay, so it looks at candlestick patterns. Okay, so I put in the candlestick patterns like hammer patterns. I call them pin bars. Okay, of my own structure, just because I had to. A hammer pattern is a little bit more specific. I left it a little bit more broad. Okay, engulfing patterns, what I call a top hat pattern. Okay, which is like if you have a bar that opens and goes up to the top, and then the next one immediately opens and goes down to the bottom. So it kind of looks like two towers next to each other. Okay, inside bars. Okay, and a couple others, dojis, etc. It takes those into consideration along with your volume, your volatility. Okay, your Fibonacci levels, but not just if you're at a Fibonacci level. But remember how I said different Fibonacci levels have a higher probability that they will affect price. Okay, so those levels are going to structure and determine where price is being met. Okay, so that's incorporated in the scoring. Cycles are taking into consideration. Now those cycle movements are pulled from the pivot-based type structure that the support and resistance are using. Okay, and the Williams percent are. So it's taking into consideration all these factors, and it gives you a scoring output of the reversal projection likelihood within price. Okay, so as we're looking at a signal, as we're looking with this example now, this is the same chart we've been analyzing. It's Estee Lauder. Okay, you can see when I get these high spikes in blue, that's indicating that I have a high bullish reversal probability. Okay, now I want to use this indicator, okay, and structure it with confirming support and resistance levels. Okay, you want to utilize that with confirming levels. As you can see, when I get these signals coming in, and we'll go over the signals here in just a moment, but when I get these signals coming in and I get a high reversal probability, that adds what? Okay, it adds confirmation to that price level. So this indicator, going back to some of the questions we had before, how do we identify what traders are doing at these particular levels? Well, the scoring indicator takes all those considerations and says, okay, are they, yes, traders are holding to these levels, or no, they're not. Okay, now, is it going to be perfect? No. Okay, I'm not giving you the crystal ball indicator, but will I go out on a stretch and say that it's pretty dang good? Yes. Okay, but I understand it. So an important structure when it comes to any type of system is making sure that you understand what's going on. And I'll give you some information a little bit later on where you can get some different training videos from me as well. Okay, you guys have any questions on the scoring structure? On what the scoring indicator does? And then we need to get into some Metastock charts here. Any questions? You guys going silent on me? Am I moving too fast? Jeff, are you still able to hear me? Just to make sure. Thanks, Jeff. Yeah, so it is the probability of reversal. So in the market, we know that there's never 100% anything. Okay, there's never 100% certainty of anything. So the indicator itself, the highest level it goes up to, I believe, is 95. Okay. The lowest level it's going to go to is 10, because you always have some sort of factor that's being incorporated into price. Right? We could have no ranking whatsoever, and then price reverses. Okay, and it just happens. All right, but yeah, so it's giving you that scale. So the higher the value, the higher the probability. I tried 3 explorations on Metastock and didn't find a way to get the highest scoring securities. Yes, Jay, if you run the Fibonacci scoring, okay, the Fibonacci exploration is a non-filtered exploration that will give you all the Fibonacci retracement values for all the securities that you run, as well as all of their scoring, okay, of the current day. Okay, so S&R is greater than or equal to 70. Do I take the trade? Yes. Okay. Now, as we get into the system here in a moment, you have to use some additional confirmation with it. Okay, but anything that's above 70s, I actually look at anything that's greater than 50. Okay, and the reason why I utilize 50, okay, is that I wanted to give myself enough room. Again, all of these structures, these indicators are mathematically calculated. They're not always going to be perfect. Okay, as much as we try to structure, okay, and program something, we can't always get it quite right to what our human eye would see, right? So I left myself some room. So the signals that you're going to get in your charts and the reports that you're going to get back, you're going to see items coming back that are around 45 and 50 to give yourself an opportunity to look at the chart, because there may just be something that's off by 1 tick that would make it go from 45 to 75. You know, it's very possible. So you want to always give yourself some room when scanning to find those. Okay, that's a good question. Good question. Okay, Jason's typing a question. See it. Okay, yeah. So Jay found it. So again, so going back to Jay's question, he just asked if there's a way that he can scan for the reversal structures in the market for all the securities. And yes, it's in the Fibonacci scan. So the Fibonacci gives you the retracements and the scoring values. Again, though, you want to make sure you're utilizing it with a support and resistance structure as well. Okay, so let's go ahead and let's dig into Metastock here quickly. I know we're basically out of time, Jeff, but we'll just run into it here quickly. So in Metastock, we're going to go in and we'll open up our chart. Now this is Estee Lauder. Now this is the chart that we've been looking at. Okay, and the reason I have Estee Lauder up is because I've been monitoring it. Okay, looking for potential buy and sell opportunities, and just got into a trade. Okay, the other day for Estee Lauder. Okay, now let's go through the process that I'm looking at to identify and pull all of the indicators that we just talked about together into the systematic structure. Okay. Now, as we pull everything together, okay, I can see in my chart I've got my support and resistance major levels. Remember, those are my key levels that I want to utilize. Okay. I've got my support and resistance minor levels, my developing levels. Okay, I've got my Williams %R up at the top, and then I've got my volume at the bottom. Okay, now going into a structure when you're looking at buy signals versus selling signals, okay, something that's very interesting that you'll find when you look at something in terms of a supply and demand, where do you think volume would fit in? Go ahead and type in the chart. On a supply and demand structure, where does volume come into play? Okay. Now it's not necessarily a trick question, but it can be a little tricky, but I want you to kind of put a different perspective on this so you understand. Okay. Couple questions. You have any ideas? No? Okay, so volume, okay, when you're analyzing volume, usually, okay, volume should increase at the supply and demand. Exactly, okay? Volume should increase at the supply and demand, but I'm going to put a different twist on it, okay? When demand runs out, what typically happens to volume? It does what? It decreases, okay? So, an interesting structure to look at when you're looking to short something, okay? You're looking to go short, you want to look back and see if volume has become exhausted. You want to see that that demand for buying at those prices was no longer there, okay? As we can see that here with Estee Lauder, before we get our sell signals, so we come into a very heavy resistance level, okay? We've got several resistance lines, and if I go back historically, okay, I've got several resistance lines that's acting at price at that particular top, okay? Now, what is my volume structure doing here at the very top? Volume is what? Exhaustion is turning point, correct, okay? So to the sell side, okay, if you're looking to sell something, so exhaustion means a couple things, okay? It means that obviously supply and demand is not there, so you're going to have a breakout to a particular structure. If you get into a resistance level and you've got exhaustion, your volume's in that exhausted state, okay? They're not buying anymore, okay? And as you see the market turn, okay, and as we start moving down, volume picks up again. Well, that indicates what? It indicates selling, okay? Selling off, okay? Now, on the buy side, what you want to see is you want to see volume actually pick up at the buy, okay? So if we look at this particular downturn that we had, we can see that our high volume, okay, came in on our entry signal. That means that the demand is coming in. The buyers are coming in at that particular level, okay? So something to remember, your volume volatility is going to come in at those buy levels, and then at an exhaustion point when we're looking to sell the market, you're going to see that volume decrease. You're going to see it fall out, and then you'll see volume pick back up again as it falls, okay? Now your scoring indicator is going to take that into consideration automatically. Now let's look at our commentary. Now the expert commentary, I structured it in a way that I would want to see it and how I would trade it every single day, okay? Because I built the system for me, okay? I built it for me, and I use it for me. Now, so what I'm looking at, if I go to my most recent buy signal that I had with Estee Lauder, okay, that we were scanning for, I have a bullish, okay, I have a bullish scoring of 80, okay, that happened. So I've got a bullish scoring of 80. Now, when I get a buy signal, what does it tell me to do? Okay, it gives me an entry management structure. Okay, so my standard entry, you need to have, okay, the easiest way, I don't care what anybody tells you, the easiest way to confirm a trade, Okay, with any system, whether it's my system, whether you're utilizing something that you built your own, the easiest way to confirm a trade is to break the high of the trade signal bar. Okay, so if you're utilizing that structure and you put in that entry, because if you don't break it, especially if you're utilizing a reversal system like the LCI, okay, if you're using a reversal structure, you want that confirmation to give you that entry point and catch the momentum as it moves up. Okay, so it gives you your limit entry structure. Okay, if you want to use additional confirmation, you can wait for the bar to close above the prior's day close. So if we're looking at this structure here, if we got our signal bar, we broke the high, okay, and we also had a close above the signal bar's close. You can wait for that. I typically don't. I set my limit entry and I'm in. I know where I'm getting in, but I also know where I'm getting out. Okay, so then this is where it's structuring the long entry stop. So it puts in a stop level, okay, so you know how much you're risking always. Now, a lot of traders, they utilize a rule where they say only risk 2%, only risk 5%, only risk 10%. Well, that's good, but it's only the first step, okay? You can't go in and say, I want to buy 1,000 shares of something. Okay, now I'm only going to risk 2%, which gives me only a 50% move where my stop loss needs to be, and you put your stop there, okay? That's not how it's not how it works in structures there. Okay. Now, what you need to utilize with this particular structure is you need to identify technically how much room that stock is going to give you. Okay. How where is that going to how much room is the stock going to give you in order to make a potentially successful trade? Because there's a lot of times like Estee Lauder where we get signals, price bounces around a little bit before it picks a direction. Okay. So if we wait for it to pick a direction, okay, and we're waiting for that, we need to have that stop level. So what we say is, okay, if my stop's going to be at 69.75, okay, and I'm getting it at 71.85, so essentially I'm risking $2, okay? I'm risking $2 of movement, okay? Now, if I want to risk $1,000, which is 2% of my portfolio, now how many shares do I buy that will give me a 2-point move to risk $1,000? Does that make sense? Okay, so let me go over that again. You take what technically a stock is going to give you. Okay, every stock needs room. Okay, it needs room to move. Right, and then take your money management structure, your 1%, your 5%, whatever that structure is, and then say, okay, now if I put my stop at 69.75, now how many shares can I buy? Right? That's how you utilize proper money management. Okay? You utilize it in sync with your technicals, okay? Especially your average movements. Now I got a question. How do I calculate the targeting price? Do you mean the profit targets that we've got listed? Okay, great question. So profit targets, again, go back to the pivot structure and cycle movement, okay? It also incorporates range, an average range of a movement as well, okay? So it's basically, it calculates and it looks at, okay, if I've got a buy signal and based off of where my other support and resistance levels are, okay, this is where my initial target is. So my initial target I want to get to is where I want to start trailing price, okay? Okay. My primary target is where I'm primarily looking for it to get, and that's the likelihood of where we have it to get. And then our extended target is if it blows past that target, we have our extended target, okay? So going back to, so if we look at the current signal, okay, that we have, it gave us a profit target of an initial target of 74 is what it should be. Yeah, 74.86. So 74.86, which is right here, which is where? Right into our most recent minor levels. You guys see that? Charles, did I say the S? I'm going to get into the SB and the MBs in just a moment, okay? That's a great question, so hold on to it. Okay. So the profit targets now, if we look at our next profit target, which is 77.88, where's 77.88? Right in my resistance, okay? My upper resistance is actually 77.76, okay? And the high of this point is 77.98. So saying an extended target back into our resistance level, okay? And then if we break through that level, then we're heading up to 81.91, where we could then project that we'll get a retracement, or at least have a probability of retracement. Okay, so it's taking into consideration those cycle structures to print it out for you. Okay. And then we go into the indicator breakdown. It's just telling you again, reading out what is the Williams %R doing, what is volume doing, what is our volatility doing, okay? And then what are our retracements, and then where's our stop loss at, okay? So it gives you a full structure on how to strategize your trade, okay? I know the biggest problem with me is I could utilize all these systems that were out there, but no one could really give me an exit structure. Okay, and the LCI stop loss indicator is going to give us or give you an appropriate structure. So it follows price with appropriate movement, and then when price kicks in with volatility, so when you have a higher volatility structure, these lighter blue dots will come in and saying, hey, look, you've got a higher probability chance that price is going to reverse on you. You're going to want to tighten your stop. Okay, let the market move, okay, but don't give away your profits. But you have to go into the market knowing, okay, that you're going to give up a little bit, okay, because you have to give it that room, okay. But you can't kill yourself when you get out and then it keeps going up, or it comes back and stops you out and then keeps going up. I talk with professional traders all the time, but one of my mentors says, you can always get back in. There's no reason why you can't get back into a trade if you're wrong. Okay, so something to think about. Don't let that fear take it out of you. Okay. Now, a great question that was asked: what do the MBs and the PBs and the SBs and all the fancy text mean in the signal? Okay, they're the type of signal that we are looking at. Okay, so if we look at this SB signal, okay, SB indicates switch bounce. Okay, so all the B's in this mean bounce. Okay, so SB means switch bounce. Switch bounce means that a previous resistance level, okay, is now acting as support. Okay, or vice versa. If we get a sell SB, it's indicating that a support level is now acting as resistance. Now you won't see these as much. You always hear the term in support and resistance that previous resistance always becomes support and previous support always becomes resistance, and it's not always the case. Okay, it's just not. So those SBs, you're not going to see them as much because they are to a higher standard and a higher structure required in order for those to be signaled. Okay, just because previous resistance doesn't always act as support. Once that level's broken, more oftentimes than not, traders actually then ignore that level. Okay, it was broken, now it's history. Okay, now they're looking to new movements. Okay, so a lot of times, price continues on. You will see that more often on an intraday basis. Okay, so when you have an intraday structure, you'll see those moving in a pattern with the support and resistance switching roles more often. Okay. Now, MB, so we get our M as in Mike, B stands for major bounce, okay? Major bounce is a single pattern, okay, or a single bar that shows that it's reacting to resistance with a higher confirmation with scoring, okay? So on that single bar, it's indicating that we have traders that are reacting to that price quite heavily, okay? And then PB, okay? So your most infrequent or SB, and then kind of the middle range is going to be your MB. Now the most frequent signal you'll get is PB. Okay. Kent, don't worry. Metastock can make sure that you're taken care of. Jeff will make sure that you're taken care of. So So PBs, okay, are our pivot bounce structure, is going to be your most frequent signal. Now, this is a multiple bar pattern that happens within a zone, okay? Happens within a resistance zone, okay, that's going to occur. So, again, to review, SB means switch bounce, okay? And that's going to indicate your reversal based off of a previous resistance or support level switching rolls, okay? Major bounce, which is a single bar action with a high probability at a level, and then pivot bounce, which is a sequence of bars that are trading within a zone or range of support and resistance that gives you that signal, okay? Okay, so let's, so do you guys have any questions on the template? Okay, so while you guys are typing, I'm going to apply our other chart. So if I apply template, okay, I've also got two other templates. So the template we just looked at was the SR main. I've also got the Fibonacci and zones. Okay, so I can apply Fibonacci, and it's going to give us that same Fibonacci structure. Now, you're going to notice there's two different Fibonacci structures that you see. You've got your purple, which is your major, and yellow, which is your minor. Okay, again, going back to that same concept of our minor support and resistance levels, okay, this is what's giving us a confirming structure. Now, both of these calculations are completely different. Okay, I'm just going to tell you right now, they look at completely different time structures, pivot structures, they're different. Okay, but more often than not, you see where these values, okay, line up. Okay, so one great example that we can look at right now is AT&T. I'm going to pull up their chart real quick to show you an example of this. Okay, now again, these levels are drawn based off of two completely different cycle, pivot, time, however you want to, slice and dice it structures. Okay, you can see that my solid yellow, okay, which is my 61% line, that golden line, okay, is lining up with my major 50% retracement, okay, and they are the exact same value, okay. So not only do I have SB, okay, which requires a higher probability, okay, do I have prices affecting? I've got a reversal scoring of 81. I've also got two Fibonacci levels that are acting together in both the short term and the long term. Okay. It's a great question. Does any of those fibs and pivots look at T at a weekly time frame? That's a great question. The funny thing is actually if you break this into a weekly chart, your yellow will more often than not be your purple line structure. Okay. Or if I break it down into a smaller time frame, into an hourly time frame chart, my purple lines are going to be the values of the yellow. Okay? So it's giving you that structure, but they're not looking back at weekly's structure to say. But if you were to look at a weekly chart, the purple lines on a daily chart are going to be the yellow lines on a weekly chart. Does that make sense? So if I go to weekly, okay, you can see where it shrinks in those levels. Okay, so remember, didn't I tell you that we're at our 50% level, right? See how we're at the yellow 50%? Do you guys see how that works? So all I did is I went to a weekly time frame. So on daily, I was at the 50% purple value, major line on a daily. And I go to a weekly chart, okay? And the yellow values are now showing what's happening on the daily structure, okay? So these values, they work in harmony together with the larger time frames. And again, that goes back to analyzing the 4-point structure for support and resistance, looking at those 4 resistance levels, 4 support levels, okay? So go back to a daily chart. So does that make sense? I know I move fast. There's a lot to calculate. Do I change the % R values on the weeklies? No, I don't, okay? Because if you're looking at a weekly chart, you want to look at what's happening in the short term on a weekly chart, and then you would want to have that line up on the short term on your daily chart. All right? Good question. Okay. I don't change the values moving time frames. Okay. It's the same structure of analysis. You're just looking at a smaller piece of it, but you analyze it the same. Okay. All good questions. Now, the system itself does come with your scans. Okay. So you've got your scans, you've got your back testers. Not your back testers, your system tests, okay, that you can back test and look at these particular structures. Now, with the system tests, they were so complicated in a way that I can structure it to add limit orders and structures like that, that it doesn't really necessarily give you the full picture. They are more or less produced to give you to try to give you a benchmark, okay? Personally, in my trading, I don't necessarily utilize back testing, okay, as a structure, because I found that when I was creating back tests, I would start to unknowingly create systems that were so perfect historically that it was unbelievable and I couldn't believe my eyes until I realized that I was, totally just data mining, okay, and was just completely programming it for that particular structure, okay? So use it as a benchmark, okay? And I will have some updates hopefully coming up here shortly that try to take some of that complexity and apply some more structure to them to make them a little bit more advanced than what they are for right now. But for right now, they should give a decent backbone structure, okay? But the scan, so going to the report, what are you going to get? Okay, so if we go into our report and, the nice right-click feature by Metastock 14, but it's going to give me what type of signals happening. So this is a bearish bounce. Okay. So the reason I found AT&T is I ran a scan today after the market. Okay, but I can rank based off of my scoring. So what does this allow me to do? It saves time. Okay. It saves me a lot of time because now I can go in and I can look at those charts and I can look at those that are higher ranked, and more often than not, they are going to structure, okay, or give me trades that I want to take advantage of the next day, okay? And if for some reason the higher ranks don't, then I can go to the next section. So typically I'll analyze anything in the 90s and the 80s, and then the 70s and the 60s, and then if I have to drop down into the 50s, then I will. Okay, but it gives you a time-saving approach to start with a top down. Okay. If you want to determine if momentum is going up or down, what do you look at? You'll want to look at the volume. Okay. Momentum is going to give you the structure trend in the volume. Okay. So the brighter colors, the higher the volatility or momentum of that particular structure. Okay. Also, a good way to look at momentum is to analyze volume simply if it's above or below its average. If you see volume consistently falling below its average, then a lot of times you'll see prices as well flatlining, being very consolidative. So it gives you a quick structure. Now, like I answered before with the other questions, if you want to get an idea of what the market is doing, so this is the S&P 500. So I can come in and it's going to give me my bullish and bearish rankings for all the S&P 500 and my major support and my minor support, or excuse me, my major and minor Fibonacci retracement levels. Okay, so I can go in and I can rank and I can see where everything is ranked for the current day. Okay. Yeah, that's a great point. So absolutely. So we can look at so if we looked at the diamonds right now, we just had a signal on the diamonds, obviously. So if we look at the diamonds on the SR, you can see that we had the same bounce structure come into the diamonds. Okay. And it also hit its first initial target. Okay. And you'll notice here that this was that big drop where everyone was panicking, thinking the market was going to collapse, and we had that big reversal. Well, surprisingly enough, guess where it turns? At support levels. Okay. Support and resistance is the structure to utilize when you're looking at these reversal type signals. Okay. Any questions? Okay. I know I moved fast. Will there be more detailed training videos? Absolutely. So Francis, I've been working for months to do training videos. So I do have a website. It's lcinvestmentanalytics.com. I'll show a slide here in a moment with that contact info. But there is a training library on there that will have hours and hours and hours of different videos on different topics over the items that I just explained to you today. So you can go in and you can break it down piece by piece. That the training library will be live starting next Monday. Okay. Can I expand on the LCI forecasting? Yes. So the signals for the expert advisor are going to be incorporated into the forecaster. Okay, so you will actually be able to forecast the LCI signals and utilize that. Of course, it does require a lot more programming, and we've been working on it, and we hope to have them applied as quickly as possible. So once we get more details on those being finished within the forecaster, you guys as customers, of course, will know immediately. So, but yeah, the forecaster will be applied. Yeah, absolutely. So let's do all the fibs. Do the fibs also use projections? So there's no Fibonacci projections currently. I will be doing a different structure that'll focus on looking at projections. Okay. Projections don't necessarily. You don't really want to look at projections when analyzing based off support and resistance values, because projections you're breaking into new highs, and new lows. Now your profit targets will incorporate some of the projection structures with the cycles. Okay. If there's one present, it will take that into consideration. But as far as plotting them, not quick. Yes. Is there a quick reference summary? Absolutely. In the Metastock help. So if you go to help, Metastock help, okay, you'll have this lovely what's new in Metastock 14. I gotta, yes. Let's go back here. So you'll have this, and then you can go into the Logan Connors Trading System, LCI, okay? And you can go into all of the indicators. I created help documents on all of them that you can go through, okay? So right there in your Metastock help, you have a quick reference guide as well. Great question. Okay. So let's get you some more. What about false breakouts? Any way to tell that, okay? So a false breakout, okay, so you do have breakout structure. So BK in the system tester is going to tell you when you're going to have a breakout, okay? A false breakout comes when you break out, okay, and then you break the high of the breakout bar. That's the best way and easiest way to identify a false breakout, okay? So let's see if I can find a false breakout here, okay? So we had a breakout, so we still did break down in price, and you can see how price immediately came back. We also got a pivot bounce signal. So one thing that I always look for is, and I know I'm running short on time here, but one thing I always look for with the breakouts is make sure that you're not trading a breakout into close support levels, okay, major levels, okay? Because if you trade a breakout, so like this one, for example, you can see how we had a breakout, and then we were breaking out into our major resistance zones, okay? So that's something that you want to be aware of. Okay. But let me give you a couple more details here. Now, on the website, if you guys go to the lcinvestmentanalytics.com, I do a newsletter. It's completely free, okay? So go sign up for it, share it with your friends. It's just something that I like to do. It's fun for me to do. Now, a few of you, if you're here with me today, lucked out. I sent out a market structure telling you to buy Disney. Okay? Does anyone know what Disney did today? Anyone watching Disney? It gapped up. So this was a structure that came out on Monday, okay? And the LCI was giving us a high indication. It was giving us like an 80% reversal projection. heading into earnings. Okay. So that was something that was sent out, and you would have been able to, potentially have taken a part of that. So feel free to go register. It's not I'm not stealing your information. It's just, a reference for traders for you to go, and you'll also get different training articles, and more, especially, updates within what I'm doing within Metastock, give you guys real opportunity. So what's the site again? So the site is, let's see here. Let me move my slide over. Okay. So now today, something I'll offer for you guys. Now I didn't tell Jeff this. I kind of snuck it in there. But for those of you that have not upgraded to 14 or haven't purchased it, or if you joined me today, okay, and you've upgraded it, I will give you 2 free additional LCI list filter scans for free. Okay. So if you don't have Metastock yet, go talk to a sales rep and get upgraded. Okay. Whether you're on an older version, you don't have Metastock, go sign up for a trial, and have your sales rep email me. They've got my contact info, and they'll give me your details, and I'll send you those additional filtering scans that you can use to really help weed out that process. So again, I'll send those to you for free. If you guys already purchased the upgrade, too bad. No, I'm just kidding. If you guys are here, if you want the scans, and you've already purchased Metastock 14, feel free to have your sales rep contact me with your details, and I'll send those to you as well. Okay. So yes, Jay upgraded yesterday. Have your sales rep shoot me an email with your details, and I'll send it over. Okay. Here's the website details that you can go. So my email is info@lcinvestmentanalytics.com. And again, you can visit us at www.lcinvestmentanalytics.com. Okay. And again, go and register for that newsletter. Share it with anybody else you might think also is interested. And give yourself a couple quick emails a week. I typically do 2, one on Monday and then one at the end of the week, recapping on what happened, just to kind of hopefully give you a good perspective on maybe what the LCI trading system is offering, and maybe give you a different perspective on what you might see. Now, if you've got a specific Metastock sales rep, of course, continue to work with them. All the guys are great guys. Of course, I got to work with them for several years. And unfortunately, I had to work with Jeff, but no, I'm just kidding. Jeff is an outstanding person to work with. But here's their contact details. If you don't have a specific sales rep, you can get in touch with them and make sure that you're taken care of. So they are after hours right now on the phone, but shoot them an email. And the promotional code for Hunter's here. Okay, great. So we do have a sales rep in the office. So go ahead and give them a call right now. Utilize the LCI Where Here code to make sure that you get those scans today. Okay, so use that LCI Where Here code. Okay. Does this work well? Pretty good with options. Absolutely, Steve. Like I said, options is a primary market for myself. Okay, so the Disney trade that I set up, Amazon I traded the other day, and also Netflix. I mean, it was a big couple weeks for myself, all in the options arena. But when you're analyzing options, again, remember that you're analyzing the underlying stock price. Okay, so if you're getting a structure or a buy or sell signal within the stock itself, all you have to do is then transfer that over to your option structure. Now, your buying, where you enter, what type of option contracts you purchase, is going to vary. And I'm sure I'll be able to talk Jeff into a specific webinar that just focuses on structuring option trades out of the LCI that'll be there. And then also on the website under the training library, there will be one as well. So do you do spreads? Very rarely do I do spreads. Sometimes I'll do like straddles or strangles heading into like earnings season, okay, just because the volatility is so high, and sometimes you don't necessarily know which direction it's going to go. When you see gap ups in a stock, it's because there was an earning event, okay? 9 times out of 10, it's because there was an earnings release, and that's why you get a gap up or a gap down, okay? So But spreads, you know, they can be confusing, but at the same time, you know, if you keep it simple, then the structure, you know, it's not as bad as you think. So it just comes with experience, you know, reading and it just comes with doing it, to be perfectly honest. So yes, Jeff is recording this webinar, and you will be able to access it. Absolutely. Is there any other questions for those of you with me today? If you're still with me, if I haven't lost you, feel free to ask away. Lots of info. Yes, lots of info. The market is lots of info. Okay. And it seems like there's so much going on right now, but again, we're trying to fit in, you know, years and years and years of work and research I've done in 1 hour. Okay. So as you structure it, it's actually very simplistic structure to look at. And hopefully, as you guys get more familiar with Metastock and with the LCI system, and as I get the training materials up online, and as you know, we do more of these webinars to get you guys familiar with how the structure is, you're going to realize that it's very simple and it makes sense. Okay, it makes sense. Do time bars work better than data bars? Better than it depends on your strategy, Steve. Okay, I prefer time bars. Okay, because it's the rawest form. Okay, and when you're intraday trading, remember you've got times within the market that are more volatile than others. Okay, if you drop that down to a tick chart and you open it up to see the first 15 minutes of the market, you're going to have so much trends up and down all over the place, and you're going to have a ton of bars printed, and then all of a sudden you're going to get to the middle of the market, you're going to have no bars printed. Okay, so in all honesty, it's a good way to identify maybe where a market is moving and where it's slower, but I personally don't place my trades on those, but that's just my personal preference. So yeah, of course. Any other questions, feel free to ask away. I know Jeff likes staying in the office late. And if you haven't gotten Metastock, call in right now and get that structured and set up with Hunter, and he'll make sure that we get you taken care of. John, is there any, so your question, is there any additional info beyond what is in Metastock on the model? So on my website, yes, there will be a lot more specifics. It just takes a long time. I'm sure that you can be aware of taking something out of your mind and putting it into a video structure. So I've got a lot of videos already, and they've been in the process of uploading throughout this week. And by this weekend, Sunday or Monday of next week, you should have several hours worth of video, and then more to come. But if you have questions on it, if you're, you know, any questions or concerns, you can email me directly at info@lcinvestmentanalytics.com, and I'm happy to answer, you know, whatever questions that you have on it and get into more of a structure on what it's based off of. Good question. Any other questions? Questions, concerns? It does work in, and then something to clarify, it does work in all markets. So I'm a very active Forex trader as well, and it certainly does work in the Forex market. And it works in the futures on the minis too. And so it'll work everywhere. Yeah, you're sure welcome. Thank you guys. Yeah, absolutely. Thank you. Yeah, exactly. Yeah, all the components, and that's, again, I built the system for myself. What do I want to see that makes it easier for me? So hopefully it gives you structure to, you know, understanding. So is there a downside? Can you clarify, Fal? I mean, there's always a downside when trading the market, and it's called risk. You always have potential risk. So There's lots of stuff that doesn't work, and there's lots of stuff that does work, and there's stuff that works at certain times, there's stuff that doesn't work at certain times. You know, that's one of those gray area questions where that's one thing that backtesting can kind of cripple you on a little bit, is you look back and you see something historically that's been accurate, but doesn't necessarily mean moving forward, and then you get into a structure of, you know, data mining yourself, you know, not understanding it. So something that that I noticed that doesn't work though is not having money management. Again, the most important structure, whether you use my system, whether you use you know, moving averages, whatever the system is, you need to make sure that you structure yourself accordingly to give yourself an opportunity to make more than what you risk. That's the most important. So. Yeah, you're sure welcome. And if you have more questions, feel free to send me an email, send me a message, and I'm happy to help you. So. Yep, not a problem, John. Thanks for moving over. We're glad to have you. So, all right. Well, I've taken enough of your guys' time. Thank you again for joining me. Again, go and look at those. Look at the newsletter. Look at the training materials. Make sure that you get upgraded to Metastock 14 so you can utilize this. Because I'm on the other side of the road. Yeah, you can still contact support tomorrow. Contact your sales rep tomorrow to get the filters. Absolutely, and I'll still send them. Just have your rep email me with the confirmation. I'll send those over to you. Absolutely. So as long as you guys do it by the end of this week, not a problem. Okay. All right. Well, thank you so much. I've had a blast presenting to you guys today. Hopefully, it's the first of many to come. Again, if you have any questions, you've got my email, and you've also got my website details. Thanks again, Jeff, for having me. Is there anything else that you need, Jeff? Nope. Okay, great. Well, perfect. Thank you, everyone.
Thanks, Logan.
Yep,
I need to turn off the recording. Thanks, Logan. Really appreciate it. If you guys have any questions, let us know. Thanks for coming tonight.